Hi, Ethereum Homestead has been released and a lot of stuff has been going on lately. Let's talk about what happened and hopefully get a glimpse into the future. So, simply said, the price has exploded. We've seen a very significant network effect around the platform and almost anything that is around it. There's been some release about proof of stake, some details to proof of concepts, which are very interesting. I'm not gonna go into too much detail, I won't get too technical, I'll try to give you a general overview. We'll talk about some issues with mining and, like always, about different investing opportunities in Dapps, Crowdsales, etc. Looking ahead, we'll talk about some potential issues. Shouldn't be too long, and investing in the space as always. And I'll give you something a bit more concrete because I realize that there is a lot of demand for very basic information of how to manage your crypto, and I'll just give you a general overview about that. So let's get started. So Homestead has been released. So Homestead is the last version of the Ethereum platform, and as you can see, that's on the ethereum.org website. They actually removed the unsafe, or they had safe but it was actually crossed logo from the website, and now it looks like this. So they are basically opening up to a wider audience. A new wallet has been released, so that's it looks pretty nice. So now it's something that most people should be able to use. Something that was quite critical because Homestead was a hard fork, was the transition, and it really happened flawlessly. Probably you could use the network at that time, you wouldn't even notice that something changed. So that was really nice. Something that's also interesting is the gas price has been reduced by a factor of 2.5. So that means that Dapps developers and users can now make transactions at a cheaper price than before, because of the price increase, which we will talk about. It also meant that the cost of transactions and of running contracts increased as well, and now there's been a change in that basic gas price. Maybe the most important thing about the Homestead release is the average block time. And if you think about it, the block reward came every 17 seconds before, and now it's about every 14 seconds, as you can see on this screenshot. What it means is that there is more ether being created every minute on average. So it's something that you need to consider. What you need to know as well is that it was always the goal to actually have a shorter block time, but still it's a temporary fix, because in the future Ethereum will switch to proof of stake, and then the block time should be even lower, and hopefully much lower. It should be around 1, 2, 3 or maybe 5 seconds. But what will come with it is that the block reward, if any, will be much lower. So the inflation should go down as well. That's something, of course, I cannot promise, and that's something you need to keep following, but I think that's very likely. But this increase like this decrease in the average block time has this impact on inflation. So it's just something you need to know. So let's talk about history. Ethereum reached $1 billion market cap. So that was in itself quite a funny moment to experience. I really didn't expect it to reach the 1 billion so fast. So that was fun. At some point, we've seen more than 60 million US dollars exchange in a day, and I thought that was really impressive. There is apparently a correlation between volume and price as well, and that screenshot is from today. You see now that Ethereum is in the second place in terms of market cap regarding all the cryptocurrencies. So that's the graph. Starts around end December 2015, and that's about now. And at that point, that was when it reached $1 billion. And you see now that it's more stable and about at that level. What you can see though is that it's very volatile. But it's really amusing because you don't see how volatile it was at that point already, because it looks so small now in comparison to the level it reached now. Nonetheless, very volatile. Something I really wanted to talk about was the network effect as well. 10,000 subscribers on Reddit. The Stack Exchange, which I was talking about in my previous video, if you remember, is now public. We've seen 100,000 unique addresses. That means Ethereum addresses, which can hold Ether. And now it's even more than that. What's quite interesting to see is that as the slope gets steeper, it usually correlates with massive increases in price. So you might wonder if it's a lagging indicator or even maybe almost a direct indicator of what's going to happen. And also we reach 5,000 nodes. So I assume most of those nodes are people running the Ethereum wallet, and the others are of course miners. So those are people who actually have the whole content of the Ethereum blockchain, and that actually share it and are connected together. So that's really quite an impressive network effect in just a few months. There's been also a significant increase in transactions, and the mining difficulty also doubled in a month. So that's the mining difficulty. Basically, you can think of it as the hash rate. It's not the same thing, but it almost correlates perfectly. So that's basically the amount of work that is needed every day, or that was, if you want, done every day. See how huge it is? That's beginning January, and that's mid-March. All right. Also, something I quite liked was to look at the Google search results, Google Analytics. So what you see in green is Bitcoin as a keyword for Google search. You see that it's really much bigger than the other, which you can see here. So yellow is the term blockchain, in blue you see Ethereum, and in red you see cryptocurrency. So you see that the red Bitcoin is actually much bigger than it. But what's funny is that every time there was something critical or really important with Bitcoin, you really saw those absolutely huge increases within a very short period of time, and then you will see it go back down, but still reach a level now that is much higher than it was before. I mean, it's not even comparable. If you look at 2009, nobody was talking about Bitcoin. And what's really interesting to see as well is that for Ethereum, the level it was in 2015 is nothing compared to the level it is now. And that curve is so steep that you wonder where it's gonna go. It seems like it's growing even faster than the term blockchain. So it's just an anecdote, but I think it's interesting to watch that for this indicator as well. So maybe in 3 to 6 months we'll see where that blue curve goes. So let's talk about Dapps and Crowdsales. I won't go into a lot of details. So Augur is finally in beta. You see the article here. Slock.it, Slock.it's pre-sale is to be announced. So in my previous video, and even my video before that, I told you that the Slock.it pre-sale will be around January or February, but actually it's gonna be a bit later than that. So watch for it. You can go on the website and subscribe to the newsletter, so you'll be informed on the status. There's also already a lot of content. I feel like they really improved our communication. They have a lot of partnerships with very different kind of companies, and what they're trying to do is much more ambitious than what they were even thinking about, I feel, just 4 to 5 months ago. So it's quite impressive what they are trying to do, and so definitely something that you should watch. Also, I also talked about Digix in my video for investors, second part, and now the crowd sale is going to be in April, and that's quite funny because in my previous video I said that they were actually going to do a sale where they would sell their gold, but I also said it was sad that they didn't do any crowd sale, but now they are doing it. So that might be quite an important event as well. I feel like many people are interested in gold, especially in that community. So it's interesting to watch what they're gonna do. There are a lot of information about the crowd sale on their website that you can find here, and also something you should watch for definitely. Alright, so let's talk about the potential issues. So you probably heard about that, but a mining pool has gotten too much hash power, and that's a bit sad. Something that was to be feared, but something that hopefully wouldn't happen. That's quite that's almost a feature of biological systems, that you tend to have centralization at some point. Typically 20% of the trees get 80% of the light, that kind of relationships. And the real idea behind cryptocurrencies as well, at least decentralized one, is to create an incentive structure that permits decentralization. And here we see that it's that's not what happened. So I'm sure that's gonna get fixed in the future. It will take some learning from the community. My explanation why this happened is that there have been a lot of people coming from Bitcoin, and the Ethereum community has almost doubled in size in a very short period of time. And what likely happened is that those Bitcoiners and those new members of the community came from a few places, and also the flow of people actually went to the same places as well. So probably only the new guys, they use the same mining pools, maybe 2 or 3 of them. They use the same software, they come from the same websites, and that's typically not what you would get with organic growth. And since the Bitcoin community is much bigger than Ethereum's, it's not surprising that something like this would happen. I expect this to smoothen with time, but it's something that actually happened to other coins, to where they got some fame outside and some Bitcoiners came in, started mining, and you got that kind of centralization. But still, I feel that the Ethereum community has responded very well, but it's nonetheless not very desirable. Of course, it doesn't threaten your money at all, as long as you don't, because if someone doesn't have your private key, they cannot do anything. But there's always the question of double spend attacks and that kind of stuff. So it's a bit sad, but I'm sure it's gonna get solved. Hopefully, the switch to proof of stake, which hasn't been announced yet, should fix this. At least in mostly as well as possible, because it shouldn't incentivize people to centralize power too much. I'll talk more about this in some other video, I assume. For now, we don't know the details, but definitely something to watch for. So yeah. Also, potential issues, there's the issue of scams. It has absolutely nothing to do with the Ethereum platform per se, but I've seen that some people that weren't there before in the community are now there. Typically some scammers that try to get you to send them money or that kind of stuff. So yeah, just watch out. But it has nothing to do with Ethereum. It's just people saw that there was money in that ecosystem, so some are trying to profit from that, even illegally. Something that's quite funny, at least that was quite funny at first, is the appearance of Ponzi schemes. So I remember the first one, and actually I remember participating in it. It was the Ethereum pyramid contract or something like this, and it was a joke where it's like, let's show how we can use Ethereum to create a Ponzi scheme, and you just had to put 1 or 2 Ether or something like this into the pyramid, and as enough people would actually join, you would actually get paid with their joining fees. If you want, you get a share on that. And that was quite funny. It showed the power of smart contracts, so that you could actually participate in a global scheme or in a kind of in a system without needing to trust anybody, because you could just audit the contract. You don't even need to know the people or even meet them or even do anything. You would just get your money, and it worked, and I actually got my money back from that one, but it was already a little while ago. And yeah, that was a very interesting experience. But what I see now is that there are a lot of similar stuff like pay that and get that are not necessarily so humorous now. It becomes kind of serious, where people try to tell you, yeah, pay now and get 3% for the rest of your life. And well, yeah, I mean, I guess I don't need to say much about that, but that's also an evolution. Looking ahead, question that I've been asking myself for a little while is, what is the value of the network? I've actually talked about the notion of value a lot in my previous videos, and what's funny to notice is that Metcalfe law kind of applies in the context of Ethereum. Basically, it says that the value of a network grows quadratically with the number of users. So if you have one user, you have a value of 1. If you have 2, you have a value of 4, and if you have 10, you have a value of 100, so to speak. And it's quite amusing to see that when you see that while the number of users hasn't necessarily been 10 times as much, the price has been much more, and also all the interest around it. So I thought that was really interesting. Also, there is now a real question about what Ether is for, because I remember when people said Ether is just gas for smart contracts, and I remember saying to someone, well, it's that, or it's whatever the market thinks it is. And that's kind of what happened, in the sense that now some people think that it has some intrinsic value, or there's definitely speculation of about its future worth, but there's also maybe some tendency to see it as a diversification tool for hedging against systemic risks in the global financial markets. So I thought it was quite interesting to see that it's also taking a similar path than Bitcoin in that regard, where it's likely that sometimes people will actually look at it in a way, in some sense, as a store of value. The inflation of Ether makes that not necessarily very clear whether it's going to be the case or not. But the switch to proof of stake, which is something I say a lot, should actually answer that question. If it's actually done in the right way, then inflation should go down substantially, and it could really become a store of value. Of course, you're taking risks now if you want to buy, or if you own Ether, about that, since you don't exactly know what it's gonna be. But I could see that in the future it could become a store of value. So I mean, just for that functionality, it's already interesting to think about it. And proof of stake, finally, we've actually seen the publication of the second proof of concept, which is basically a small Python program that shows new capabilities that they are developing. And there have been some news about how many proof of stake validators are needed, are going to be used, how it's going to work, what is the minimum amount of Ether that you'll need to stake. I won't go too much into this. I suggest you read the article. I also think that many things are not extremely clear and defined now, so I guess for another video I'll give you a more detailed explanation and analysis of what I think it's gonna be. I have to say, to keep it short, that my reaction when I saw the article was very positive, although I've seen some people say, oh yeah, but now I don't have enough to stake. Some said, well, but there might be decentralized mining, like staking pools. So there is a huge discussion going around it. So I thought I will leave it a little bit on the side for now, and once we have more clarity on the matter, I guess I'll go back and do another video. So looking ahead, future crowd sales. So like the one I told you before, there are actually other ones. There's also the one about a decentralized Augur, but I'm not quite sure about it yet. Just something just doesn't feel quite right. So once I feel like there is an exciting and a good value proposition, I'll talk about it and see how it goes. Otherwise, you can just look for it. I'll also give you the links below. There are a lot of new dApps that have been developed and that are being developed now. So on that link, you'll find a lot more about that. And now, as I've been asked to do it a lot, so I will give you a small disclaimer and also a little tips on how to buy and sell. So many people ask me, where can I buy? So usually you either want to go to Kraken or Poloniex. If you own Bitcoins, I suggest you go to Poloniex. If you own US dollars, euro, then go to Kraken. I didn't get the thing in the right order, so disclaimer, don't trust others blindly, which is common sense, but I still would like to say it because I heard of some people that lost their money because they trusted the wrong people. Of course, I assume you wouldn't do that, but smart contracts, trustlessness, sure, but in the end, if you that only works within the context of smart contracts. So just that it's clear. If you give the password to your account to someone, then they have access. I mean, it's obvious, but apparently it's not obvious for everybody. Also, wallets. So that's a question that I get often and almost got every week. What wallet should I use? So the one I use personally is Mist. It's the official wallet. There are at least 2 others, but there are more being created. Also for Bitcoin user, there are also other wallets. I also maybe put them in the links, but the one I know are those ones. Those are online wallets, so it's much easier for you. You can actually have them just in your browser. So that's quite convenient, but of course the most secure alternative is to use Mist. So that's it. I tried to keep it as short as I could, within 30 minutes. I hope you enjoyed it. If there is anything you need, go to my website. You will see the article and also put some links on there, and you can get the slides. If you want to see more, just subscribe. Leave some comments below. Check the description box as well. You'll get some more details and links. And yeah, if you want the slides, they're on my website. It's a PDF, so everything you can click on and directly go to the website. All right, thank you very much and enjoy.